But what we've got to remember is we had some really good times and we've had some extremely low interest rates. Let me just kind of roll back to pre-credit crunch of 2008. In 2007, I had a mortgage on one of my apartments in Cardiff Bay, which was 6% at the time. It was a variable rate, don't get me wrong. So actually when the base rate started to come down after the credit crunch, my interest rate kept going down. But I was paying 6%. And prior to that, on some of the other properties I had, I was looking through some old mortgage offers. They were somewhere between 5 and 6%. So we're talking 15 years ago. So I think we kind of forget that actually interest rates around about the 4, 5, 6% were kind of the norm back then.
What happens to my assets? I've got tracksuits and shorts.
Okay, let's talk about the reality of the current mortgage climate. It's a bit of a buzz thing going on at the moment, outside some of the mini budget stuff that's gone on. And actually today he's dropped a massive bombshell of getting rid of the 45% higher rate tax which they were abolishing. They're going to bring back. So what a bold move by the government, and not going to build them many more fans of that. We've actually reneged on what they were originally saying, but we won't get into the depths of that. Let's go back to the mortgage market, because there's a lot of kind of talk about the fact that interest rates are being pulled, mortgages are being pulled, and kind of there being kind of less opportunity in the market. So if we kind of scroll back maybe 12 months, you were seeing interest rates of sub 1% for a 5-year fixed, which is kind of unheard of, not something I've seen in my career, which is in excess of 15 years doing what I do. But what we've got to remember is we had some really good times and we've had some extremely low interest rates. Let me just kind of roll back to pre-credit crunch of 2008. In 2007, I had a mortgage on one of my apartments in Cardiff Bay, which was 6% at the time. It was a variable rate, don't get me wrong. So actually when the base rate started to come down after the credit crunch, my interest rate kept going down. But I was paying 6%. And prior to that, on some of the other properties I had, I was looking through some old mortgage offers. They were somewhere between 5 and 6%. So we're talking 15 years ago. So I think we kind of forget that actually interest rates around about the 4, 5, 6% were kind of the norm back then. And we just had this sustained period of the last 15 years whereby we've had extremely low interest rates, and they just got to actually a crazy level of kind of sub 1% interest rates. And, you know, we got a few clients on those deals, and, you know, well done to them. But we just got to be mindful that, yes, things are tough and things are hard, but, you know, mortgage rates are going to be higher now. You know, we're starting to see interest rates of late 4s into 5s and 6% coming out now, after the kind of lenders all kind of pulled their interest rates. And I think we'll go through a period probably till the middle of next year where they're going to be at that level. And I think then things will level out and they'll probably come down a little bit more. But it's all going to come down to you when you're looking for it. Is it affordable for me? So you really got to run your numbers, and actually maybe you won't be able to stretch yourself that big house you were kind of looking for, and you've got to be a little bit more kind of sensible. And I know people are going on about, well, my salary's not keeping up with the pace of inflation or the pace of interest rates going up. But then sometimes we've got to stand back and go, well, actually, what can we do to help this? And we can't just go on blaming the mortgage companies. We've got to stand back and go, well, actually, are we living above our means in our lifestyle? You know, are we eating out more than we were? Are we buying more things on Amazon? Are we buying more things online? A lot more than we actually originally would have. So I think sometimes we've got to stand back and look at ourselves and say, well, what can we do to help the situation? Because we are now a nation of wanting fast food, fast fashion, and all these things that we can just get within a very short period. So that's one of the things I kind of say, you know, yeah, interest rates are going to be high, but then we've just got to look at the kind of options on how we can kind of make it affordable for us. And let's go back to the kind of mortgages. You know, there's a lot of stuff said in the press recently whereby maybe you should cut the mortgage broker out of this and go and try and find the best deal you can get. Well, I'll tell you this from my stance. Now, I've been in the mortgage game and financial services game for in excess of 15 years. And I think actually using the broker is the best thing you can possibly do, because we do have access to the whole market. You know, there's somewhere in excess of 80 lenders in the market and sometimes 11,000 products. By you going on, the likes of Money Supermarkets, Go Compares, or some of these comparison sites, one, they mislead you and they will show you deals are actually only available to current customers or premier customers, and they're actually only showing the deals that they can actually show on there, so the ones that maybe make them a bit of extra commission by sending you through that lender, but they're not going to show you the whole market. So a broker will do that, and yes, you may have to pay a fee, but you're paying for a professional service. Okay, this isn't just some sort of kind of part-time job for people. This is what we do, and we specialize in finding the best deals we can possibly find for our clients. So go and find yourself a mortgage broker. Find one local to you. Find someone who's independent, who's going to find you the best deal out there, and tell them what you need, and they'll run you the best deals. So now is not the time to get rid of a professional. It's like saying you go to the GP and the GP says you need a knee replacement, and you turn around and go, I tell you what, I'm going to do it myself because it's cheaper. It's no different than that. You're not going to go and replace your own knee. You're going to go and see a specialist who's going to cost money. Might cost you, might cost the NHS, whichever way you do it. But you need to pay for a professional to find you the best deal and get you the right outcome for what you need. So yeah, interest rates are going up, but there's a few things we can do. We can speak to a mortgage broker, and sometimes we just got to look at what we're doing, what we're spending, and say, well, actually, am I doing a lot more than what I used to do because the cost of my mortgage has been so cheap previously that I kind of didn't really think of the long-term kind of future of it. So there we go. So there's some tips for you.